Hey, good morning. Thanks so much for your patience. I was just setting everything up with my computer. Hope you guys are doing well, and thank you so much for joining today. I know that it takes a lot to come to these presentations, and the fact that you guys are here is showing us that you guys are really into learning, and I appreciate it, and I know everybody else does. So thank you again for being here. So this is me. I am Marina, the Trader Chick, saying hello to you guys right now. And what I want to cover today, basically, I want to talk about understanding what long-term investing really is. I get a lot of people that get very confused with that, and sometimes just understanding that, and especially on the time frame. So I'm going to be talking all about that, because I get a lot of people whenever they ask me, so what do you do? I'm like, oh, I'm a day trader. Oh, I really want to learn how to invest. And I always say, we day trade to invest, because even though they're kind of under the same umbrella, they're incredibly different, right? Just because you went to medical school and one person left, being a oncologist, a cancer specialist, I'm not sure that they would be really helpful if you have a cataract. So just because you're MD does not mean that you can handle all that. The same thing with the financial markets. There is a massive difference between long-term investing and short-term trading, or short-term, I guess you could call it trading, right? Swing trading would probably fall more under the trading thing, because it's also the way you understand the market. It's not only about, long-term, short-term. It's also about the reason behind you have done what you've done. So before we jump in, I want to do a quick intro, because who we are as people really is the reason why we do what we do. It's not all about the charts. It's not all about the strategies. Those are definitely important, and you cannot do one without the other, but you also have to know who you are, right, as a person. So I am Marina. I am an expat. I live in Antigua, Guatemala. I'm also a mama to these two little guys. And before I became a day trader, I actually was a fitness instructor. So it mainly goes to show that you do not need to have any economic, financial, math background at all. I was literally one of the very first spin and Pilates instructors in Manhattan. So it goes to show you how old I am. And I also was a travel writer. I actually still am a travel writer. I still have my travel site going on. And the reason why I really bring this up is that you really can do anything before becoming a day trader, and you could still do both, to be honest with you. I'm also trilingual. And the reason why I bring this up is because the way I started to understand the market and what it's actually saying is when I realized that it works very similarly to like learning a language. So I'm actually a Soviet Union refugee. So I speak Russian. That is my mother tongue, but I was raised in the US. So I speak English. It's my main language. And because I learned English when I was really small, I didn't really learn it. Right? I don't know if any of you guys have any kids that have learned second, third language when they were small. They don't really learn it. It just becomes instinctual, right? They just kind of get it. It's kind of like learning a new word. Instead, the new word is in a different language, and they understand that. So for me, it wasn't really learning a new language. However, Spanish was learning a new language for me. Since we have been living in Central America for over 20 years, I learned Spanish in my later years, and this whole process of learning how to speak the language really opened me up to understanding that the market, no matter what you're doing, trading, swing trading, investing, you have to understand what it is saying to you to be able to understand when is the best time to enter, what to do, right? And that's literally the reason why I bring this up, because when you have that process already of going through learning a new language, you could apply it to learning how to read the markets. And the coolest thing about day trading is that you can literally do this anywhere, or investing. I know quite a lot of people that invest and basically just check to see about their dividends, about if they want to add on to their positions, things like that. And you can do this from anywhere in the world. And I have been featured on quite a lot of different summits, as much as, I've been working with David quite a lot, but I've also done live shows, Money Show, Traders Expo. I've done quite a few of those live way before COVID came about. And once COVID hit, I just preferred to really do a lot more virtual stuff. So before I jump into this presentation, I do have a free worksheet that I'm offering you guys. You could get it here at makingofadaytrader.com. Makingofadaytrader.com. You could go and get the whole worksheet here completely free. Excuse me, let me just drink some water. So makingofadaytrader.com. Makingofadaytrader.com. Okay, so I want to explain the difference between day trading and investing and why it's super important to understand the difference with those two. So next time you meet a day trader, or if you are a day trader and somebody comes up to you and they're like, oh, I want to learn how to invest, you'll be able to explain the reason why. First and foremost, when we day trade, that means, you know, having our positions within certain one day, we don't want to diversify, right? Like for instance, when we are investing, we want to have a very diversified portfolio, right? Because this way we're not putting all our eggs in one basket, because it's an over time that we're going to be doing that, right? Unlike with day trading, we really do want to focus on just the one market. It's kind of like a music student, right? Because it's so full on. You have to sit in front of the computer. You have to really understand the charts constantly, depending on your day trading style. It could be a scalper. You could hold it for a couple of hours, holding for a little bit longer targets. But it's better, for instance, if you really focus on, let's say, the violin versus, you know, focusing the violin, the drums, and the flute all at the same time. So with investing, you can do all of those instruments at once, but you're not focusing on each one all at once, right? You're doing one at a time, and that's how you're able to add in and put those positions in or get out of those positions. So the real main thing with investors is that they really care about the company. It's literally becoming a part owner, technically, right? Depends, obviously, if you're long on gold and wheat, and it's a little bit different, but it's still very similar, right? The idea behind it is still quite similar. So investors, they really care about the companies they are investing in. For instance, Apple, right? We know Apple is a fantastic company, right? Amazon, these are strong companies. They are not going away tomorrow. So for instance, you know, investing, like a good example with what's just happened. Obviously, right now, the market has been tanking. It's been so erratic. It's been going up and down. You don't really want to focus too much on it, although this is the best time to get in, by the way, those bargain prices, because the market is going to fully correct. The fear is going to go away, and this is the best time to enter if you have the funds. Obviously, I do not recommend margin accounts, and I will talk about this a lot in a few minutes, because that is just a scheme to get money out of you. Anyways, so let's talk about Amazon. Amazon just split, right? I don't know if you guys have followed that. Amazon just split, and once it's, you know, before it split, it was kind of going up, but once it split, it started to go down. This is a very normal pattern for all the time. However, now it's coming back up. Why? Because we know that it's Amazon, right? It's not going away. As a matter of fact, it's probably going to just keep on expanding, right? So when it goes down, the investors, if you believe in this company, if you're in it long term, if you're holding long, you know what? It doesn't matter. You're going to get past it, right? You're going to get through those ups and downs. However, when you're day trading, it matters, because you're literally in for the day only, right? So for instance, if the consensus, if your technical analysis is really showing you that the market is going to be going down, so that's when you want to short the market. You want to short that particular instrument, right? So sticking with Amazon. So if you're day trading Amazon, and there's quite a lot of people that do it very prosperously, you know, you would start shorting it, because that's what your indicators are telling you for the day. It doesn't matter what it's going to do in 2 years, because you're not in it for the 2 years you're in it for that moment, for that day. So it doesn't matter if the money if it's going up or down in the market, people, day traders still make money. But investors, you literally just sit through it. You believe because you've already done the due diligence. You know what you're doing. Obviously, if you're going to be taking some aggressive, longer term holds, you have to understand. So it's a shorter time frame as well. And that's also really important to understand. Now, I want to talk about the myths about day trading and investing. For day trading, especially, it's considered to be a huge gamble because you're in and out of the market during that same day, right? So it's the same with investing to an extent. Again, you really need to do your due diligence. And I always tell people, whoever want to invest longer term, go with what you already know, what you already trust, right? I trust Amazon. I trust Apple. I trust Microsoft. So I'm going to be looking, and that's a good place to start. If you haven't begun yet, this is the best place to begin. Understand, finding things that you really trust. And then you could go and expand and start to learn how to see others. For instance, if it's dividend, or if it's a high yield dividend, means that it's pretty aggressive. It's a pretty aggressive stock or position when it's a high yield dividend, but you also get the high yields, right? So you start to really learn the difference. And the other thing is that you need to have $25,000 to really get started, to really hold a strong portfolio. Total lie, total lie. And this is the beginning of the margin account, right? They only tell you that you need to have $25,000 so that the broker can give you a margin account. This is really important. Margin accounts, I call them loan sharking, because you do not need to have a margin account. What is a margin account? Let's say that you want to buy all of these positions, but you don't have enough money. So the margin account is the broker lending you the money, right? They are not giving you any favors. They're literally lending it to you. So if you end up losing or winning, they don't care, because you're going to need to pay them back, and on top of that, paying them back with interest. And the only way you could actually get a margin account with most brokers is if you have a minimum of $25,000. So that's the hack. Stay away from those margin accounts, even if you have $1 million. You do not need that, and it's completely not mandatory. And you could tell them that you do not want it, and for them to take you off the margin account list altogether. Very simple. Another thing is that you need to have a financial background, a math background. None of this is true for no matter what you want to end up doing. Either investing, trading, whichever, right? So this could be quite chaotic, because what happens when you have multiple instruments is that you have multiple chaos going on, right? So that's the beauty of investing, is that you do not need to look at all your different instruments all together all at once, right? And whoever is day trading with this kind of a layout, I'll tell you right now, it's completely not sustainable. Get rid of that, because all it's going to do is really trigger like seizures. Honestly, it is not worth this stress. Totally not worth it. Okay. So another thing is, a lot of people are constantly following the new shiny object syndrome, right? Like the new algorithm, the new indicator, the new software. And the only people really making money from that are the people that you are buying it from. I have yet to meet somebody that it's actually really helped. So you can learn everything with a platform that you are working with, and that's really all you need. So a lot of times with research, especially for shorter term, research can really get you in the wrong places, right? It's like buy on the rumor, sell on the news. We've all seen it happen. For short term, it is just pure toxic. However, for long term, you could just ignore it altogether, right? It's not worth even going here. But you do have to do your own market research. You do have to know, are there new products coming out? Minus the drama. When Jeff Bezos and his wife, ex-wife, got a divorce, Amazon tanked. Why? Who cares? It has nothing to do with Amazon, right? And then, the months after that, it just soared, because it's nonsense. It's telenovelas, right? It doesn't have anything to do with what's actually happening with the company. And that you have to be able to filter through. And real, people that are succeeding, they do filter through. They're able to ignore that nonsense. Okay, so it's really important to understand that if you do want to do quick trades, You want to be conservative, right? You don't want to be in and out. You don't want to be super aggressive. And that's important to understand, and remain conservative. Okay. So one thing that's really important, and this doesn't only go for a trade, but I guess trade is like a position format. A lot of people feel that they are constantly missing out, and then they rush in when it's already too late, right? Like good examples was with crypto. So I always say right now we are in the panic selling mode, but there's also such a thing as called panic buying. And panic buying, the whole premise there is FOMO or FOMAT, right? The fear of missing out on that trade. So that's really important to completely understand. Like with crypto, I was saying, you know, there was at one point that Bitcoin got up to $60,000 and a lot of people were still buying, right? I mean, that was pretty, that's fear of missing out. You don't want to even do that no matter what. With long-term, short-term, it does not matter, because remember here, there's always something coming. And now look at crypto, right? It's down to the 20s, okay? So it's really, really important to understand. Now, I want to talk about the different markets that are out there, and not only for day trading, because you can go long and stay long in quite a lot of these. Forex, right? I know that Forex is pretty much overall a day trading type of a market. However, you can be in it long, right? Especially what's happening now with the euro versus the dollar. I mean, the euro has been below the dollar, which has never happened except for when it first was introduced into the marketplace, right? Over 20 years ago. So you could stay long on that pair. You don't need to be in and out of it, right? You could still be long-term on the euro, whatever, thinking that the euro is going to keep going stronger or the dollar is going to go stronger. You decide how you're going to work that. But the point is that you can still do that, right? So also equities. Obviously equities, whenever we think of long-term investing, this is really where we want to focus the majority of our long-term research, right? So equities are the companies. Companies is where you want to become an investor. This is where you want to become part owner, I guess you could say, right? Obviously, we are not capable of being part owner unless you put in a whole lot of money. And as you can see with the whole thing with Elon Musk wanting to be even owner of Twitter, you need to put up a lot of money to even be understood as somebody to give advice. But that's a whole other thing. You could still be in long term and still have your voter rights, right? So even with equities, there are so many ways of doing so. For instance, you could do sectors, you could do big caps, small caps, and you can definitely do the actual company, let's say Amazon, Apple, Tesla, or you could do ETFs of different kinds of indexes, different kinds of sectors. There are ETFs for everything today. There's also funds, but I really don't recommend funds as much as I do ETFs. I mean, mutual funds. Mutual funds, there's a lot of fine print writing there that you really want to avoid. Okay, so your best bet is, you know, ETFs are probably amazing, especially if you don't have time to do a lot of research on the different companies. That could be a really, they have aristocrat dividend ETFs. They have high yield dividend ETFs. They have an ETF for everything, but you do need to do your research, because a lot of those ETFs, they fail as well. So futures, right? A lot of people love to be in the futures market. So the thing with the futures market or the commodities market is, again, it is really a predominantly day trading market for a smaller account. But if you do want to hold overnight, you definitely can. And I know quite a lot of people that do it. You just need to have a lot more money in your account. For instance, with the E-minis, which is mainly what I like to focus on, if I want to day trade it, I could just have $1,000 in my account. But if I want to hold it overnight, I do need to have $10,000 to $15,000, depending on your broker, to hold overnight. So this is something that you really need to understand. And it's just to have there. You don't need to be investing that kind of money. It's just kind of like a leverage, right, of what is in the account to hold you there accountable, I guess you could say. Options, a lot of people, you know, do options really quickly. You can do options for a longer term, although I personally am not an options person, so I can't give you that much information on options. And crypto. So crypto it's not only Bitcoin. Bitcoin is one out of over 6,000 different types of projects and coins altogether, all right? Personally, I am quite long on a lot of different currencies, cryptocurrencies, and I am long on Bitcoin. I entered Bitcoin high up, not in the 60s, even though right now it's totally crashed. I believe in it. I don't see crypto going away. I just feel like it's being too manipulated by the governments, by the whales, whatever the reason is. But the point is that it is here to stay. And if you are into crypto, being long is a much, much more a probability of becoming successful than doing day trading on it, because a lot of people leverage, and leverage will kill you. So even if you do day trade crypto, stay away from leveraging. You don't want to ever do that. Just buy it at the price, whatever price it is, and don't do the leveraging. Okay. And if you guys don't understand what I'm talking about, that means you're not into crypto, and that's okay. If you want to ask me about it, I'm happy to explain what leveraging is. But for the sake of this presentation, especially for a longer term, you don't need to leverage anything at all. Okay, I really want to talk about brokers, because no matter what we do, if you're day trading, swing trading, long term, you have to go through a broker. Whenever I hear people complain, oh, those brokers, there's really nowhere in between. Not many, you know, unless you've got a seat at one of these exchanges. That's a myth that people want to hold on to. You can't do it. It's totally not even possible. It's not even worth it. It's kind of like saying that you want to go and buy a pair of Levi jeans, and you don't want to go to the store. You want to go directly to the factory and buy them there. You have to buy them, but it doesn't work like that, right? There's a reason. The store, the broker, that's what they are. Store, you know, like clothing stores, brokers, they're the same. So the thing is with brokers, their whole business is literally you buying stuff, right? Literally buying or selling or whatever. So for the most part, if they do work off of commissions, the ones that aren't taking commissions with equities right now, they're making money otherwise, right? So don't get fooled by their generosity. There is zero generosity on their end. And to be honest with you, the least you know, the better off they are, because then they get even more money. Right. And like I said before, you need to stay away from those margin accounts. Once you have $25,000, for the most part, again, every broker is going to be different. But overall, the average, when you have $25,000 or more, whatever broker you're with, that's when they start to offer you a margin account, right? And that's literally loan sharking, right? They are literally giving you money to borrow. No matter you lose, you win, they don't care. You're going to need to pay them back, and they know where you live. They can get access to a lot of your other stuff. And on top of paying them back, you have to pay them back with interest. Just don't do the margin accounts, okay? Stay away. Now, the other thing is really important is you need to have a fee, right? There are a lot of brokers that offer pretty basic platforms. If you want to get a little bit more into, you know, the more nitty gritty, the more technical analysis, you will need to find a really good platform. That's probably the only software you'll need, because all the platforms, they will give you free universal indicators. Anyways, a lot of times you might need to buy the live feed. What is live feed? It is literally gasoline for your car. It is literally gasoline for your charts. Now, if you want to do long-term, being on delayed feed, it's not a problem. Who cares, right? Because you're not in and out of positions. So live feed is really more important if you want to exit the position at that moment. So that's where it's really important, okay? And commissions. So as we mentioned earlier, there are no commissions for equities for the most part with the majority of brokers today. However, there are commissions for futures, for crypto, for other different exchanges, right? So you do need to understand that. Now, why is this important to understand? Because if you are going to be into crypto, you don't want to be with an equities broker, right? Because first of all, that's not their thing. They're going to be charging you a lot more for commissions. Secondly, and their feed is not going to be up to date as much as a crypto exchange. Okay, that's why Binance, Kraken, Coinbase, these are exchanges or brokers for crypto. TD Ameritrade, I don't even know others because I'm with TD Ameritrade, but these are the ones that are with equities, right? So you have to understand those differences. Now, for platforms. First of all, if you're going to be day trading, which a lot of people like to go between, you know, long-term and day trading, do not even consider going, you know, doing day trading on something like Robinhood or a pretty basic platform. It's really important to have a good, strong platform. Okay. It's really, really important to do that. So make sure that you invest in a good platform if you want to day trade. If you just want to go, you know, stick to long term, just being with a good broker that gives you up-to-date feed, especially for your entries when you're buying, it's great. Otherwise, you're fine with a delayed feed. So I want to talk a little bit about the lingo, because this lingo is for, it doesn't matter if you're shorting. I mean, if you're long-term, short-term, swing trade, it doesn't matter because the lingo is still pretty much the same, right? So as I mentioned before, intraday trading, that's literally all it is. It's literally being in and out of positions in that same day. If you're holding it overnight and taking it out the next day, that's not intraday anymore. That's already swing trading. Okay. Obviously, longer term, we're holding anywhere more three months or more. Sean, this is Marina, the trader chick. Hi. Okay. So bull market. What is the bull market? Right now, we are not in a bull market, right? We're in a bear market, but bull market is literally when the market is going up, market is trending up. Bear market is pretty much what we are in right now, right? It is, the market is trending down, the market is going down. But we also have consolidated markets, right? We have flat. It's kind of like a flat line, right? When there's really nothing going on at all. It's just consolidating, it's boring, it's not someplace that you really want to start to make moves in. Okay, now profit target and risk management. If you are going long term, you don't really need to think about this as much. However, if you are day trading or swing trading, I definitely recommend that you have a profit target in place, right? So you know where you want to get your profit out, and you definitely need a risk management in place, because that is super important, right? You do not want to give all of your money to the market. You want to tell the market where you want to get out. You want to be in control of that market. Okay, and you could do that all by understanding what the charts are telling you, because the charts are really your holy grail. Okay, now we use indicators. Even if you're just investing, indicators can be really helpful. Whatever your indicator is, you know, I personally only use 2 indicators. I only have EMA lines and MACDs. Those are my 2 main indicators that I personally use. You could use it on any time frame. And I get a lot of people, a lot of my students, new students come to me and they're like, oh, I have all these indicators. Which one, you know, is the best? I'm like, well, why do you even have so many? Well, you know, this guy said to use this one, and this one said to use that one, and this book said, I'm like, but you know, just because they're all saying different things does not mean that it's going to work for you. So what I always recommend is take each indicator, study it, learn it, see how you work with it, see how it feels to use it. If you don't get it, don't use it. Like for instance, for me, Kettler bands, Bollinger bands, and Fibonacci's, I tried to use those 3 indicators for years and it never worked for me. Like they just never worked. And honestly, they just kept on giving me more problems than good, right? Until I finally got rid of them. And all of a sudden, I just felt like this massive load off my shoulders and I started to succeed. So sometimes we have indicators that we don't really understand why they're there, only to realize that they actually haven't been helping us at all. So this is something that you need to really understand and focus on, okay? Again, trending markets, you really need to understand when is that sideways market, because you don't want to be in that market at all. All right, this is really important for terminology, because even though you might know what it means, sometimes you might be doing the opposite and not understanding why. What buying, going long, what is that? It is literally in an upward trending market when you are entering at a lower price point and you're exiting at a higher price point and you're taking the money in between. Okay, you're taking that profit in between, but you're going along, you're buying at a lower price point, exiting at a higher price point, versus selling, going short. Okay, and by the way, you can go short and still be long term. That's That's literally what the entire movie Big Short is all about. Those guys were shorting for, 2-3 years. They were short. So this is not only a day trading term, but what exactly is selling or shorting the market? It's literally you're entering the market at a higher price point and you're exiting at a lower price point, and you're taking the profit in between. Okay, so you could definitely do that as long as you understand the reason behind it. Now, what is the difference between market entry and limit order? When you are going long term, it does not matter if you enter market entry. Why? Because, for instance, if Amazon is at 130, when you press market entry, you probably entered at 131, right? That's called slippage. It's a totally normal thing to do. However, if you're day trading and you're going only in for 1 point gain, and you do that, that's that 1 point right away, right? So you need to put in your limit order because you're telling the market exactly where you want to enter, because then you can tell the market exactly where you want to exit. So those are the real differences. It's market entry will give you that slippage, but for long term, it doesn't make a difference, right? Because you're in it for the longer term. Stop limit works the exact same way, like the risk management. You're telling the market exactly where you want to be exited. However, if you market stop, that means you're going to do slippage. Again, if you're going in for Amazon and it's going the wrong way, and you see, you wanted to get to 131, but it's going down to 129, you press a market, it's probably going to stop you out at 128 because it's giving you that slippage. It's kind of penalizing you. So with a stop limit, you tell it, you know what, if it doesn't go my direction, I want it to stop me out at 129. It will stop you out at 129. All right, so technical analysis. For the most part, we use technical analysis on a much shorter time frames, but it is good to have that artillery in your toolbox so that you can work with that even for your longer term, right? Because, for instance, it's really important to understand when there are areas formed and when you have, let's say, the consolidating area, or when the trend comes to an end. And those areas are resistance areas and support areas. I personally like to think of them as safety gear, right? Safety gear is kind of like this. Look, Formula One drivers, during their racing season, they know that 25% of the drivers are going to either have an accident or a fatality. This is a horrible fact, but they all know it. It's part of their business, right? So they're never going to just get in the car and go. They're going to put on their fireproof uniform, their helmet. Once they get in, they're going to put on their seatbelts. This is, safety measures that they're taking. In finance, day trading, especially, not so much investing, but day trading, 95% of the people fail, right? That's because they don't put on their safety gear. Resistance areas and support areas are those seatbelts, right? Because when you're seeing a resistance area form, when it's stopping a certain trend or being the top of a channel, you know that you don't want to get in it because it could totally go the opposite direction. Or the support area, which is the floor of the market. The same thing when it's stopping that downward trend, right? It's bouncing off and down. We don't know if it's going to break through and continue going further down or do a complete transition. So you need to draw these out. Even if you have the lamest, Mickey Mouse platforms out there, they all give you free drawing tools, even as basic as a line. So please make sure that you do that no matter what you are going for. The best thing also that I use pretty much for everything are reversal patterns, right? Reversal patterns are amazing. They are triple tops, double tops, even head and shoulders, triple bottoms, triple tops, the same thing, right? So they're telling you that the market is slowing down and there could be a massive indication of a changing direction. Now, I personally use divergence. I love divergence. So I use MACDs, which usually is, to me, the least lagging indicator. It's really showing where the market is starting to slow down or lose its strength. Meanwhile, the market is going in the opposite direction of the MACDs. So it's showing me that there's a divergence, right? Now, I like to put all this together again. So make sure that you guys get your free presentation at makingofadaytrader.com. Makingofadaytrader.com. All right. Now, long-term or short-term, it doesn't matter because breakouts are really some of the best trades out there. Why is that? It's because we have had a consolidating market because we've drawn in the areas, right? So we know when it finally breaks on through. So this is a breakout, okay? This is what a breakout looks like. And again, it could be for a long term. One of the stocks that you've been watching, you know, on your watch list has been consolidating for months, and all of a sudden it broke through. So you want to obviously get in as early as possible on that breakthrough, and that's going to be the best time to do it. So what is a breakout? Literally, it's when you're moving in one direction, and then there's a consolidation, a channel, and you're not sure if it's going to go down or head in the same direction. So basically, when it breaks out and heads in that same direction. Okay. So this is just pretty much going over how I take my breakout trades, because I do need the MACDs to be flying high, no divergences, and using my EMAs for where I enter those trades. All right, so let's go to makingofadaytrader.com to get your free presentation. I want to talk about live market right now. So I personally am a day trader when it comes to my charts. What is the main difference with day trading as far as the time frame and investing? So this is super, super important, guys. Right here, I have, as you can see, I am on a 610 chart. However, if you are going to be investing, do you really, really want to go in on a minute chart? Do you want to go in on a day chart? Do you even want to go in on a week chart? Chances are you want to be looking at the month or the year. Oh, hang on a second. I don't think my chart is being seen, right? Are you guys seeing my chart? Can you guys let me know? Hello, hello, hello.
I'm seeing your presentation.
Okay, so it's not there. Hang on a second. Let me share my chart then with you guys. Okay, you should see my chart now, right?
Yes.
Okay. Actually, you know what? Hang on a second. Let me do this. Oh, it's just the screen. Okay. So, David, can you see me opening up the time thing here?
Yeah, I can see that.
Cool. Okay, so I'm going to go back to explaining this right now. So my chart right now is set up on a tick chart. A tick chart is, and actually you could use tick charts for very long term as well, because you could customize it. Well, tick charts is literally per each candlestick right here. It's the amount of transactions that happen per candlestick. Okay. So right here, when, for instance, if you want to be a long-term investor, if you want to get in and don't really have a time, do you really want to look at a minute chart or a second chart or even a day chart? No, because those time frames don't work for you, right? They're too short. If you want to be a swing trader and you're okay with going for 2-3 weeks, do you want to look at that minute chart? No, you want to look more at the day chart or even better, the week chart. So if you're going in for a longer term, right, you want to look at the month and even the year, okay? Because that will give you a much more appropriate understanding of what is happening in that time frame. Okay, so this is really, really important. And it's a huge difference because I get people that want to be long-term investors and they're looking at day charts. Maybe for the day, if you want to get in on the best price of that day, but for the overall strategy, days is not going to make a difference. You want to be on a week, month is even better. The year, it's getting a little bit too much, right? Unless it's like Coca-Cola that's been around forever. But even with Coca-Cola, a year is still, you know, it's a big time frame. You want to stick to the month or the week for the longer term, because it will help you also see what is really happening in the overall market, because it's usually part of the charting software, the chart right in front of you. Okay, hopefully that makes sense. All right, so let me know if you guys are able to see my presentation again. Let me just make sure here. I'm going to just go back to the presentation to make sure. Okay, so this is the deal, guys. We have absolutely everything we need to take action, right? Everything. But then how do we know if we're doing it right? And this isn't only if you want to day trade, this is also for long-term investing. How do you know you're doing it right? How do you know you're assessing what's happening in front of you, right? All of this is great, but the real question is, how do we get started? How do we even begin with all this? And this isn't only from beginners. I get this from seasoned traders and people who have been successful and want to start investing and really don't know, because investing is such a different process, right? And usually just understanding, lacking these basics that I just went over can really be the entire difference for everything. It's literally like driving a car, right? My 18-year-old son just learned how to drive a car. And when he first sat down in the car, my husband is like, okay, you got to put on your seatbelt, put your foot on the clutch, on the brake, put your gear in first, release the clutch and go. My son is like, clutch? Where's the clutch? Where's the gear? He had no idea, because we forget that we at one point learned the basics of driving, and today we just jump in and it's not a big deal, right? And that's the same thing with everything we're doing. But a lot of times, especially with trading and the financial markets, nobody teaches us those basics. If you get in a car, you've never been in a car your entire life, you get in and the person driving, they're like, okay, put on your seatbelt, it's going to save your life. If you've never been in a car, you don't have any idea what a seatbelt is, but you know that this is the thing that's going to save my life. What's going to happen? You're going to start to stress, right? You're not going to have a good feeling, because you need to learn what is going to protect you. And it's the same thing when you are in the financial markets. How can you protect yourself? Because we all know the financial markets are a risky place, right? And this is my own sad truth. I spent over $20,000 on different trainings and nobody taught me the basics. Every single time I asked anything about the basics, I was either treated like I'm supposed to be born with that information or completely ignored. And I struggled for years, and then I ended up losing over almost $4,000 in 5 minutes, okay? Simply because nobody was there helping me. And I ended up quitting. I literally quit. I walked away. But here's the thing, guys. We get bit by this trading bug, by the financial bug, and it never, ever stops itching. And the reason why is because deep down inside, we know that we could do this, that we can successfully do this. So that's when I decided to really focus on the basics. Okay, here's a really good example. And one day, one of my students comes to me and they're like, Marina, your teaching really reminds me of Coach John Wooden. And I'm like, who's Coach John Wooden? So of course I went and I looked him up, and well, he's not around anymore. He was a legendary basketball coach. And I mean, this guy was incredible. Okay, incredible. He was a legend. He had the LA dynasty. And his entire philosophy and teaching methods all stemmed from, when in doubt, get back to the basics. I mean, this guy won 88 championships, 11 NCAAs. I mean, he worked with the biggest superstars of basketball. Yet every season when they began, and this could be the same for every time you want to get in a new trade, or if you want to buy a long-term position, he would start with the basics, because it doesn't matter all you think you know. Because if these guys, who think they're the shit, who think they're the bomb, if they forget how to tie their shoelace, how to roll up their socks properly, guess what? Their shoe could fall off during the game, sprain their ankle, and they're out on the bleachers for the rest of the season. You don't want to overlook the basics, because they are literally what can keep you going. What I literally say is, you cannot put in your windows without your walls. So I have a very special offer for participants only. This is my introductory course, bootcampfordaytrading.com. I have a lot of people that use this for long-term and even for swing trading. Okay, and all of this education that you're going to get in this course is $97. $97 one-time fee. One time, $97. What do you get for this $97? This is the return on the investment that you're going to get. Can you compare it to if you guys want to go golfing for the day? Golfing today for one person isn't even $97. So you can't even invite your friends. Or believe it or not, I live in Antigua, Guatemala. $97 does not even cover a decent dinner for me and my husband anymore. Before, it used to be an entire family dinner with wine and drinks and desserts, because that's the reality, right? $97. So I'm going to break it down for you. We're going to go over your platform so you really understand, because a lot of people spend too much time trying to understand their platforms and unable to. And I give you a 30-minute full-on tutorial that we work together to set you up so you never have to worry about that. Understanding the trends, because it's really important to see when those trends really happen and to be able to read what is going on, right? With reversal patterns, with those divergences, and also those safety gears, guys. You have to know when there's support, resistance areas, understanding these areas and divergences, because the market could be going in one way, but your indicators could be pointing to another way. And it will be a really important time to understand when to sit out so that you don't get in on the wrong time, and to be able to spot when is that market finally breaking out, because breakouts are the best times to enter any positions. Okay. And you will get unlimited access to this curriculum. All of this is $1,600 value. Okay, you guys get the workspace, the understanding of the trends, understanding the areas, and the breakout. And I have students from all over the world, because that's what the cool thing about investing and trading is. You could apply this to any market internationally. Here's Michelle. Best money I ever spent. Marina, totally helps you, and the homework is invaluable. You are the only mentor I know that checks the work. I am totally enjoying this bootcamp and learning every day. So here's something super important, guys. Remember how I mentioned in the beginning, how do you know you're doing it right? How do you know you're doing it right? So that is all about a mentorship, having a coach, that one-on-one to bring you to the top. And that is for investing, swing trading, day trading, whatever. I am offering you guys 1 month, one-on-one free mentorship with me, unlimited feedback included in this $97. And on top of that, if you guys are interested in just seeing how the market is working, I have a live room where you guys will get 30-day free membership in there. All of that is $2,600 value. But for you guys, it's $97, one-time fee. Bootcamp for daytrading.com. Go here right now, guys. This is a total no-brainer. Bootcamp. Yes.
Sorry to interrupt, but that site's down again.
What?
I mean, it is for me at least, unless.
All right, bootcamp for date. No, it's working. So let's use this as the actual site right here.
You might be seeing a cached version though.
Oh, you are so right. Oh.
But
no, this is incognito. It's working for me.
That
incognito usually. All right, let me see if I have.
Do you want to, just tell them from your main site? No.
Hang on, let me just see it on another. Is everybody else having difficulties with this? No, it's working fine. I don't.
Okay, I mean, I just tried it on several different devices and it's not loading. So
really? Is everybody else not seeing bootcamp for daytrading.com? Okay, well, I just put the actual link in here. It's just too long for people to see it.
They could also contact you from your main site, right?
Yeah. Hang on a moment. Can you unpause my screen? Sure. Why is it paused?
Oh, in the Zoom menu, there's a pause function.
That's weird. Why was it paused?
You might have accidentally clicked it. done
Oh,
that.
that's weird.
Oh, Dalton's saying he sees it. Okay, I don't.
Can you guys see my,
Oh,
can you see this?
I don't know if he's referring to the site or.
Oh, hang on a second. Okay, well, are you guys? All right.
Okay,
So
now
let's
it's unshared.
okay, can you guys see this now?
Yeah.
Okay, okay, so right here, you could go Marina, K, Villatoro. So it's too long, but honestly, you should be able to do boot camp for day trading. Yeah, is anybody, can somebody else go in and who's in the room right now and put in boot camp for day trading to see if it's working on your end? That's interesting. I don't know why it's not working. But anyways, if you go, I put in, oh, I didn't put it in for everybody. Hang on. I only put it in. Can you do it for everybody? I only have access for hosts and panelists for the link, David.
Yeah.
Yeah, so this is the one that it directs you to. This is the main link right there. Okay. So yeah, let me know if you guys can see that. That's really bizarre. I don't know why it's not working. I'm gonna try it on another. Let's see here. The link works. Okay. Yeah, it's working on every apparatus of mine. I just tried it on 4 different other phones, which I never ever use for this. So there's no cache. I don't know.
Okay.
Okay. Well, this again, guys, you could go here, and the reality is this is $97. It's a total no-brainer. Thanks, John. Thanks, Dalton, for checking in. So here's the reality, guys. All of this that you'll get from here, from this course, and the fact that you're working with me for 1 entire month for 30 days, you know, it's 10x you'll get on return of your investment. Just your own questions and sending me your charts and sending me those questions alone will be everything. So that is really the key, so that you can go out and enjoy 100 of these dinners with your family and friends. But the thing is, guys, I'm only able to really take on 25 people, okay? Because I really, really, really want to focus on you guys. So go here. Again, you have the full site or bootcampfordaytrading.com. Thanks, Andrea. Go here, check it out. You know, $97, you really can't go wrong. And I hope that we work together. This way, I can really help you guys take it to the next level. Thank you so much, everybody, for being here and for being so interactive and for learning, because really it's all about learning. So I'm hoping that we will be working together one-on-one. Go here, bootcampfordaytrading.com. And thanks so much, David, again, for inviting me. I always love these shows. And also the PDF that David is talking about, I have a whole video explaining about a stock and, you know, for this time, how to buy and the reasons. So check out his PDF as well, because he put in a lot of work working on that, and it's really great. Thanks, everybody. Thank you, David.